look at it today. Today is currently Sunday, March 30th, and this is the day where I clear my charts and I do all my new market structure to prepare for the week. So right now I'm on gold, and I like to start on the 5-minute time frame for gold because gold is a slower moving pair. And so I start from the 5-minute and I go up. So the first thing I do is price action is going to be in the center of the screen. I zoom all the way out on TradingView until I can't anymore. And then I drag the screen over to the left. And the reason I do this is because when I drag it to the left, it allows me to identify market structure that's current and relevant now, instead of like when it's in the center of the screen and seeing all of this price action here and trying to mark up this, which is irrelevant to now. So zooming all the way out allows me to see the actual highs and lows that matter, because if you zoom in, you see the highs and lows, but you may be looking at internal structure rather than zooming out and seeing the outer structure, external structure that holds and maintains and forms the structure in the first place. So we have a high there, a low there. We have a high, low, right? And what I just labeled are the most important structures. So if I go here, then I go to, what I do next is I go to the 15-minute and I just examine. I just pay attention. I examine. I look. Okay, there's an order block right there that's getting filled / a gap, if you can look at it. It's the gap. And there was also an order block right here. So I'll just fill in this whole zone. That represents the gap and order block, right? Demand zone. And so we have that demand zone on gold, and once gold tapped into that demand zone, we actually saw price. What did it do? It rose, and it's attempting to break out this liquidity right here. Okay, you can just label that. And I actually have a line that I have for liquidity that I have labeled, so I can just go here and just type in liquidity line, and then I can go and do this. So boom. And what I'm going to be actually doing, guys, is I'm going to be waiting for gold to take this liquidity out, this buy side liquidity, this support, some people call it. And once this liquidity is taken out and gold breaks this high and creates a new high, I'm going to look for some new demand to be created. And in that new demand, I will find either a order block or a fair value gap to enter off of, because those are the only two types of setups that I take. And right now, the reason also why I trade on the lower time frame on gold is because if you go to the 1 hour, I've always missed setups on gold because I'm thinking that I need to go on a higher time frame and wait. For example, there's a gap right here. This is how I used to trade. There's a gap right here on the 1 hour all the way down here. I used to think I would have to wait all the way until it goes down there and to trade, and then I wouldn't know what I'm actually doing because I didn't understand trends properly. But market structure is almost your best friend, because like I said, market structure is the structure of how the market moves. So when markets are healthy, it goes up, down, up, down, up, down. And sometimes when there's high volume in the market doesn't have time to do that. So you'll see this expansion, right? Gold will just expand and go up, expand, and then it won't actually correct and pull back to all these gaps here. And so that's fine. You don't need to trade these gaps, because it's when there's such high volume, it's not going to pull back deep like when there's low volume. When there's high volume, it's going to go up, correct a little bit, go up, correct a little bit, and then your job is to enter, like I say in every video, off of those corrections. And for gold, it doesn't necessarily need to correct all the way to the middle right here. Sometimes for gold, it will correct right here, and you can find the order block that has the most volume, which is, by the way, a major tip to finding the right fair value gap or order block in the first place, is volume. So if you see an order block and you're worried about it going to fill in, let's say, a gap all the way down here, then you would just need to turn on the volume chart and then just take a look and see which order block / zone has the most volume. So yeah, I hope this was actually helpful. I didn't want to make this video too long. Yeah, so that's my plan and my outlook on gold. And yeah, guys, I trade like this all the time. I trade really simple. That's pretty much all I do. I look at Forex Factory, and then there's no U.S. dollar news tomorrow. But I'm still going to look out because this gold is real close to this liquidity area. It might consolidate. It might stay here. Who knows? But this is why I like to have my confluences, because I'm not getting into this trade unless I see gold break. And yeah, I should have actually entered right here on this demand zone here, but I didn't. But that's what I'm waiting for now is it to take out the next high. So if you ever miss a zone, by the way, or you miss the fair value gap, or you miss your entry, just wait for it to take out a new high also, and you can get in on that next move. But yeah, I hope this video actually was helpful to you guys. I like to keep things simple and trade simple. I've been trading for 6 years total, and I became profitable in the last 2 years trading fair value gaps and order blocks. So yeah, guys, if you have any questions, let me know. You can email, not email, message me on Instagram. You can join my free Discord. And yeah, guys, I hope you like the video. Peace.